Ways and Means Committee, it's still Thursday, April 17th. We are still the Ways and Means Committee. It is 10:50 a.m., even though I did say we were going to start at 10:43. Appreciate those of you who returned to the room. We are going to spend a few minutes discussing H-115, which was is it a short form? It was a short form. It's a short form bill that we heard a little bit about way back in January, which was an act relating to tax debt forgiveness for victims of fraud. I think this motivation for the bill is very sympathetic, and as is always the case, it's all much more complicated than we might seem. And so really want to dive in a little bit around getting our heads around the scope of the challenge, but also getting our heads around the scope of how much resolution we actually already have under current law. And so to start us off, Jeff, if you would like to join us, thank you.
Hi. Hello, my name is Jeff Dooley. I am the taxpayer advocate for the Vermont Department of Finance. Where would you like to start with?
I would like to start with the fact, under current law and your office and your relationship with the tax department, if someone was in the position that's sort of described under this bill, and they experience, they're a victim of fraud, and then wind up sort of withdrawing, the scenario we have, they withdrew a large sum of money, they wind up with tax liability from it, they don't actually have the money. What could they do under current law that might have not happened in this particular case? And maybe any ideas you have on why it didn't happen and what we could do better next time?
Under current law, what they can do is apply for extraordinary relief, which I've described to the committee before, but in case you need a reminder, it's when the letter of the law applies to someone in a way that's unfair, unforeseen, or creates a significant financial hardship. They can write to me, either in writing or digitally, and then I look into it and present it to the commissioner, and then he can choose to go around the letter of the law and provide extraordinary relief or choose not to. That's at his discretion. But so in this case, if the fraud creates a tax liability that wouldn't have existed absent the fraud, we can basically exclude that income that the person received from their income for that personal year, and then they wouldn't experience the tax liability on top of the harm that they've already received in that case. So that's what currently exists under the law.
Do you have any sense of why that might not happen sometimes?
I think it's more of a communications issue where the person just doesn't know that that is an option, or it isn't communicated to them, where if they contact the department and they don't get the person who they're talking to doesn't know that my office can do that, they might just say, well, you withdrew this from your 401k, from your investment account, whatever it is, that's a taxable event, you owe tax on it.
Do you have no, stop, Representative Burkhardt.
I guess my question was sort of broader, but how do people normally come to you? Is it through legal counsel? Is it through their accountants? When people do land on your doorstep to ask for extraordinary relief, how do they find you?
It can come through legal counsel or their preparer. That's probably the minority of people who come to me, just because the most people who come to me tend to be lower income, so they don't necessarily have representation or preparers. So a lot of times it is someone in the department who says, oh, well, if you feel that you have a hardship or you're in the situation, let me refer you to the taxpayer advocate. And then they would refer to me. There also is information on our website that about my office and what I do. And yeah, legal aid, Vermont Legal Aid is also, I work fairly closely with them, so they will refer people to me as well.
I'm wondering if you could have, we could have a line on the Vermont tax return. And I know this is probably, you're gonna pay federal and state, but it would alert people to the issue. And then you could say, were you the victim of fraud where you cashed in, you know, retirement accounts or something? And because if they see that, then if so, call the taxpayer advocate, you know. I mean, that's really would get to everybody who files a return anyway.
In the booklet, there is information about my office, but realistically,
Most people don't
oh, no.
have tax forms.
well, that's the point I was about to make, is that year over year, we're seeing exponentially less people file the paper form. Almost everybody at this point is filing electronically. And so that would, we would have to work with vendors to have them have some sort of pop-up or something on there, which I don't know. It's a little bit difficult being Vermont, that we're a fairly small state, so these,
They don't want.
they don't want to pour a ton of resources into updating our information every year. In terms of communication and outreach, that is a conversation that we had, that I had with some people in the department yesterday, because we did look at our website, and there is information about fraud on our website, but it's mostly focused on tax fraud. Like, are you aware of someone committing tax fraud? So I think one thing that we can do better, and that we can do going forward, is I've been having monthly meetings with our new fully staffed communications team about outreach we can do. And one of the things we talked about was doing some taxpayer advocate branded outreach and communications. And this could be a good opportunity for one of the first ones of getting it out there. Like, have you been the victim of fraud? If so, contact the taxpayer advocate. And getting that more prominently on our website, or on our website, to be honest, and, you know, more out there in various communities. And so that people can know that if they have been a victim of this type of fraud, that they can contact me. And to be completely honest, in the first probably 8 years that I was in this position, I think I maybe had 2 cases of people who've been defrauded come across my desk, where I escalated to extraordinary relief. And now maybe that's just because people didn't know, or maybe that's for whatever reason. But this year I had 6 cases come across my desk. So I think this is something that has kind of expanded a lot in the last 2 to 3 years, where people are experiencing this more, and where it's becoming more and more sophisticated in the ways that people are executing these schemes. I know anecdotally, there's one person in the department who told me that their father almost lost $25,000, and the scheme was kind of ingenious, where they got an obvious scam text, and then someone called them within like half hour after that saying, did you get a text from so-and-so? Because we're aware of this fraud scheme, and we want you to help us catch this person.
Ooh.
Go along with them, and we'll help you catch this person. And the person thought that they were, you know, we're in on this scheme to catch this fraudster, when actually the other person was in league with the fraudster trying to defraud them. So it's getting more and more sophisticated. And to maybe jump ahead a little bit, that's why it's a little bit difficult to tackle this problem statutorily, is because it is a very case by case, fact specific issue where every single scheme is slightly different from the one that's come before it. So trying to pin down what is fraud is a little bit difficult because it changes almost from day to day at this point.
And I think we're gonna hear a lot more about that from the Visa Association. Yes.
You said that you have a fully staffed communications department. If you give legislators, right, to all members, front porch forum posts, and if you also give us 250 or 350 words that we can put in local newspapers, and then I was thinking ARP, but you can think of all those things too.
Yep.
But that is a way for us to just, for free, post all over the state, what they need to do, and an example of how you can help people.
So you mentioned that sometimes some people at the tax department might not know that you're a resource within the tax department. What's happening to make that happen less often?
Well, we
You
definitely,
get like a special hat that you just walk around with that's like, I'm this guy here and we're to the staff meetings.
well, I mean, we definitely try to let people know that I exist and that they should forward people to me. But I mean, we are very busy at certain times of year, this being one of them. And so we do hire temps and we try to get them up to speed, but there's, sometimes for them, it can be like drinking from a fire hose when they come on and are thrown into tax season. And honestly, sometimes it just could be that the person doesn't explain their situation in a way that lets the person on the phone know that that's what happened. They could just be like, oh, I deducted this from my 401k, but I didn't mean to. And they'll be like, well, you did it. So, and then they don't get the extra context that after the fact, it was, stolen from them.
Mhm.
So, but we are constantly trying to get people in the department. And I think most people know that I exist, but it can happen that people fall between the cracks, or I think in one specific case, person said, oh, well, I'll let the taxpayer advocate know about your circumstance, but didn't specifically tell them you should contact the taxpayer advocate. And so there was a little bit of a disconnect between what happened in that case.
Thanks, Nicholas. Representative Wilson.
Rough ballpark of how many cases you refer for extraordinary relief in any given year?
In a given year, it's usually close to 60. But the vast majority of those tend to be people who miss the property tax credit deadline for various reasons. Traditionally, fraud has been relatively rare, but again, like I said, there have been more cases in the past 2 years than I've seen in total over the 6 or 7 years before that.
Might have something to do with how much the Attorney General talks about.
President Feltes?
No, I was just thinking, number one, of, the person that calls in on a line and it expresses a concern and wanting to make sure that they get enough information to get referred to your office. But I can certainly understand frustrated taxpayer may not explain the whole situation to the caller or to the person on the phone.
And in these particular cases, it is tough because a lot of times there is
Well,
some
they're
kind of
embarrassed. Right.
embarrassment that they feel like I shouldn't have felt for this, and that's so they might not come forward. And honestly, that's something that I struggle with across the board. Is I can only help the people who come across my desk, and what happens to those people who might be in a similar situation who don't end up on my desk. And we try to reach those people, but it's sometimes difficult.
And in my experience, I think the banking industry and the mutual fund industry has done a pretty darn good job of saying, are you sure you want to take this money out? Are you sure you want to transfer this these funds and you, oh, well, yes, of course. Well, do you know what'll happen if you do, you know, and I think that's the front line, of course, but.
Hey, oh,
You get any complaints from folks that are having trouble with like their renter rebates?
I have not, had a lot of call volume on that. I know that department wide, that drives a lot of call volume is that people who are looking for their, renter credit, tend to be, anxious and want that, sooner rather than later. But I know that we do, as a department, prioritize, returns that have a renter credit for that reason, because it does drive call volume and does cause anxiety among the population. But from my understanding is where we are this year with the renter credit, about on pace with where we want to be and where we have been in prior years. But so.
thank you very much for joining us.
Thank you.
Todd, I believe this is your first time with us here in Ways and Means.
It is.
Welcome.
Go to the opportunity.
Grateful that you're available.
For the record, Todd Delos, Assistant Attorney General. I'm the Director of Policy and Legislative Affairs for the AG's office. Thank you for having me here. I'm happy to go wherever the committee wants to go. Happy to talk some about scams generally. Hearing the conversation that's occurred thus far, you know, and appreciating, and Rep was, I'm not going to try and.
Heading's fine.
I almost said it, and then I was.
Wazo, Zach, they're all
Wazo.
like very similarly toned syllables.
Now again, so.
That was very charming.
Was it close? Okay, great.
Appreciating Representative Wazazak's.
See?
I'm gonna use it probably too many times now. Kudos to the AG's office and Rep. Feltus also flagging that the banking industry has been a core partner in helping add some of those layers of questions and real focus for individuals. But of course, these scams do get more and more and more complex, more and more and more believable. And the real challenge in how to provide a remedy for individuals, whether it's through a tax deduction or otherwise, is, you know, what's the difference between and where do the lines fall between your cousin suggesting, hey, got a great deal, I'm going to triple your money in 30 days, and a much more involved criminal enterprise, right? What's a bad investment? What's a loss? And what's a scam? And I think, you know, as we looked into this at Representative Burkhart's request, we ran into a thicket. And so I'll just lay out some of that thicket for you all, and I'm happy to entertain questions. You know, so we run into that. The first challenge is that definitional problem. How are you going to define a scam? How are we going to draw the right parameters around what is the kind of loss the state of Vermont wants to recognize as not the direct fault, recognizing there's a ton of guilt in this space. I mean, that's exactly right. None of us like to feel like we've been played, and that's what scammers are relying on. In fact, that's the hook that continues.
Shame.
Shame is,
Okay.
that's a much better phrase. Thank you.
Okay.
So, you know, I think that may be the core definitional piece. Then we run into the challenge of how do you demonstrate what is the proof that a taxpayer either has to have in the event of an audit or present as part of their filing in order to show that this was a scam, it wasn't a risky financial proposition, and otherwise, you know, is it documentation? Is it, how far do you have to go down the line? Especially recognizing a lot of these criminal actors are overseas. It's very, very difficult to get any kind of relief through the Vermont or even the United States justice system. And then, you know, how are the claims going to be assessed? What is the process that the tax department very likely would undertake here to assess those? So, you know, those are where we saw the sort of first line questions that we felt like needed to be answered. So let me pause there and just sort of see if there are questions in there, and then I have something I found interesting. You may not. Just from the other day. Okay, I'll go to the interesting thing. So as it turns out, yesterday or the day before, the New York Times had an article on this topic about how the federal government is addressing victims of scam and fraud. And it pointed to, and I should have led with this, I'm not a tax attorney, I'm not a tax expert. We have great tax attorneys and tax experts at the Department of Taxes. So I am on the same level as everybody else when I read IRS guidance, including, I don't read the booklet. Just don't. I didn't know Jeff's office existed until I learned about the taxpayer advocate through doing this work. So there's more to be gained in further advertising and getting the word out. Maybe the hat is the way to go. So I will say there's guidance that came out from the federal IRS last month. It's actually dated January 17th. I'll send it to Sorsha so that you all have copies of it, that basically lays out a number of scenarios under which individuals can claim a federal tax deduction based on being victims of a scam. And that may be a place to look for guidance around how Vermont could either piggyback on that or otherwise, with a not insignificant caveat. This particular guidance, and I believe the underlying regulation, relies on the 2017 tax cuts that were passed on the federal level that the current administration and the current majority in the Congress are looking at extending and expanding. And this is one area where they may extend and expand. So there may be federal action in this area that could go any number of ways. So I don't want to go too much more into depth than that, because that may be the depth that I'm capable of going into.
Please send us the article.
I'll send you both the article and the guidance. But it at least would suggest seeing where the feds go, seeing how the feds are treating it. Because again, Vermont can only, you know this better than I, Vermont can only do for Vermont on this. And if the feds are leading, that could be a much easier space to kind of say, I can't remember if it's the we do another one, the medical expense deduction we carry through. So that could be another piece of it. So that was the interesting thing. Happy to answer questions.
I'd love just a little bit more on sort of fraud generally, like what scale you're seeing of incidents like this, what people do, how they get in touch with your office.
Yeah. We get, and I didn't bring it with me, and I apologize for that. I didn't print it this morning. We publish a sort of annual list of the top 10 scams in Vermont, and financial crimes are always pretty far up there. And those scams, maybe the top 5, actually, I don't know which it is. We get a lot of complaints. That has led to a lot of the cooperation we have, as I said, with the banking industry and other financial institutions around the kind of questions we work together to have individuals answer when they're going to withdraw money and otherwise. You know, that shame concept is probably one of the bigger ones that we really have to work through, is whether somebody is going to, you know, own up to it. There's been good media on it. 7 Days had a recent, probably wasn't that recent, but, you know, had a focused issue on this as well. And so I'm happy to get those numbers for you all, and I'll send those through our consumer assistance program up at UVM. It's a partnership between the AGO and UVM. Focuses a lot on this. That's the major outreach organ for our consumer work. And so that is the receptacle for a lot of these complaints and a lot of the opportunity for your constituents and others to reach out and get the relief. It's not always direct relief. Sometimes it's just referrals to other entities that can help and support. And as this committee is well aware, those entities that are related to the federal government are currently on the wane, which means there's more for us to pick up as well in our work.
Any further questions? Yes.
I don't know if you know this or not, it might be in the article that we can read, but how the deduction for victims of fraud, or is it just like a standard, you're a victim of fraud, you've proven that through X means, so here's $1,000 deduction, or is it more specific to the amount of money that was lost?
It's more specific to the amount of money. And it is, again, with the penalties that are associated with a false filing. That's, you know, it's an investigative based deduction. It is not a demonstration of proof upfront.
Thanks.
You're very welcome.
Thank you for coming over and-
Pleasure to be here.
Yeah.
My apologies, I'm gonna run back down to House Judiciary. Who wants to?
Thanks for being with us.
Of course. Pleasure.
Chris.
Hey. Got it.
You can keep it safe.
I appreciate that.
Good morning. For the record, Chris Delia, President, Vermont Bankers Association. I guess let me give you an overview of what we're seeing out there in the marketplace. I think I've shared with a number of folks in this building that probably over the last 18 to 24 months, we've just seen a real explosion of scam activity in the market. It's all different types of scams that are preying on individuals. It's not just the elderly, it's people of all ages that are subject to these fraud activities, criminal activities that have gone on out there. It's still very much the romance scams. It's the grandson, granddaughter scams. It's the Microsoft scams. It's whatever you can
What's a
think.
Microsoft scam?
That's where you get a message via email that says you've got a problem with your Microsoft software on your computer. Give me access to it. We'll go ahead and fix it. Some people do that. And as they're in there, they'll plant malware or they'll find a way to get access to your accounts that you might have on your computer, these financial accounts, passwords, et cetera. And they're off to the races with that information. So there's a lot of different ways these scams are taking place out there. Numbers vary widely, but I've read anywhere from 150 to 160 billion as far as losses are concerned across the country. That's just those who've reported. So it could be upwards of 300 billion that you might see out there in the marketplace. It is a critical issue for our institutions when we have folks on the front line who are working with our customers. So every day there's engagements with our customers in these very conversations. Why are you taking the money out? What are you doing with the money? And those are not easy conversations to have because it is your money. And there's a lot of people who get angry at the fact that we're asking these questions. But our folks do, our folks are trained on it, our folks are kept up to date on what's going on. And there's a progression of conversation that will occur starting with the frontline folks, but then it will progress to branch managers and beyond if they're not making any headway with the individual. The other thing that's happening is our folks are part of a very strong network here in Vermont of federal, state, and local law enforcement and various agencies in communicating on a regular basis. They get together at least once a month to have these conversations about what's happening in the marketplace, what are the latest scams. We would rely on Homeland Security, FBI, and others to work with cooperatively. As you just heard, those are under a lot of pressure these days. So we may not have the resources that we would like to study these activities, investigate these activities in Vermont. I will also say from a local law enforcement perspective, they are under the gun. They have a lot of issues to deal with locally and don't necessarily have the resources. So financial crimes don't often rise to a high level where they can dedicate time and resources. So for that victim out there, you know, maybe one of the evidences that you would present to the tax department or somebody else would be some type of, police report. Chances are you're not going to have that because the police aren't actively involved. So this is a real critical issue out there. I've got a law firm that we've been communicating with over $256,000 that they lost to a group out in California that they thought they were engaging in a contract with. We've got a customer, and these are just examples, down in Brattleboro, who took money out and went to a crypto kiosk over in Keene, New Hampshire, and put the money in the crypto kiosk because they thought it was correcting a problem with their bank account. I've talked with folks down in the Bennington area that have cases where criminal activity has lined up a bunch of victims in an area, And then they'll have what's called a mule come in and just go around to those victims' houses, collect the money. And then either wire the money to out of state, Canada or elsewhere, or take the money across the board. And the pattern seems to be, we'll prey on Vermont victims for a week or two. We'll line up a bunch of people, we'll get the money, and then we're gone for 4, 5, 6 months. People start to forget about it. And then here they come back in again with a slightly different variation of the criminal activity. The one good thing that was reported recently was the arrests of, I think it was over 25 people up in Canada who were known to be perpetrating the grandson, granddaughter's fraud that was happening. So that's encouraging, but that's just not even the tip of the iceberg. 25 people out of probably thousands out there that are doing it. And I would submit to you that this isn't necessarily individuals that are sitting in the dark in their basements doing this. These are quite sophisticated criminal networks that if you would envision a office environment with cubicles, those are the types of activities that are occurring in other parts of the world that are preying on victims here in the United States. It's not all in the shadows. So challenging to deal with. I would echo what you just heard about the concerns of how to implement something like this, because you want to ensure that the individual is a victim of fraud. How do you determine that? What evidence would you look to determine it? And then what's the guardrails or the appetite for doing this? Because it could be quite significant, the request for some type of tax credit. And I don't say that pro or con. It's just there's a lot of unanswered questions that you'd have to try and get your arms around to come up with a system that's going to work effectively. I'm glad to hear from the taxpayer advocate that there's those extraordinary circumstances that you could come in and at least file for. And maybe that can be helpful with more awareness out there, but very, very, very difficult issue to try and address in the marketplace and therefore provide relief. Yeah. I'm with you.
What do you do?
Right? What do you do? One thing you should know that we are exploring, you folks passed in H137 work down in the House Commerce Committee. This is a study to develop language that would give financial institutions the ability to place a transactional hold on an account. I use that word transactional intentionally because we don't want to freeze the whole account because you have other need for your funds. But somebody walks in and says, I want to take $10,000 out. There are laws in other states that would give the financial institution the ability to say, okay, we're going to hold that for 15 days. And we're going to have a conversation with you. And we're going to do that over time. And hopefully when we're all done with that conversation, the light bulb's gone off and you've said, yeah, you're right, I shouldn't be doing this. If at the end of 15 days, they still feel strongly about it, again, it's their money, then they have the right to take it out. There has been some proven success with that in other states. So the study, there just wasn't enough time in the session to try and come up with the right language. So we're going to be working with the Department of Financial Regulation over the summer to try and look at what other states have done. Bring in folks like AARP and others to say, okay, what's the right language that we should have here in Vermont? So that is one tool that doesn't exist today that we can hopefully have next year for you folks to take a look at.
I like that approach. And would that also extend to, like, if someone had their accounts with Fidelity or something that isn't a Vermont, it isn't doing business in Vermont, and it's not a Vermont bank?
Yeah, I don't see why it wouldn't be part of the discussion to see what we can come up with. And this would apply to any entity that's doing, our notion would be to apply to any entity that's doing business with a Vermont customer.
Okay.
So even though they're not here, your investment advisors in California or somewhere else, if you're doing business with a Vermonter, then that theoretically should or could apply. So I think it will be part of the conversations over in the summer and fall, because you're right, it's just not your bank account, it's your 401k, it's whatever other investments you may have.
I think that's a great idea.
I can think of another, sometimes some of these amounts that are requested to be taken out, it could be time sensitive, so is there an opportunity within those 50 days to verify that this is exactly where the money's going for, it's a legitimate transaction? So rather than just at the end of 15 days, we will get.
I think those will be unique circumstances that we'd have to understand for each one. So for example, let's say that somebody's coming in with a check and they're depositing the check. I could envision where there's communications that are going on behind the scenes with financial institutions to see if that's a valid account, a valid check, routing numbers, et cetera. The case with the lawyer's account was they got a check for $296,000. They put it in the bank and they immediately wired $256,000. And for the life of me, I can't understand, why didn't you wait for that check to clear? I mean, that just, anyway, they did. So I could envision where there would be opportunities for that type of activity behind the scenes. But if it's a case of, take your money out to the crypto kiosk, the bank can communicate as much as they want with that customer, that it wasn't the bank telling you there was a problem with your account. At the end of the day, if they don't believe you, they still have a right to access their funds.
We outlook crypto kiosk.
So I think in Chris's example, it was actually New Hampshire crypto.
Correct.
That Brattleboro. 'Cause
That Brattleboro.
many of us live on borders.
I know.
And that, in that case, it was a communication from what they thought was their bank. I mean, banner, email, everything looked like it was from their bank. Logos, and they told the person, you have a problem with your account. If you take $9,000 out, go to the crypto kiosk in New Hampshire, put it in, the money will get back to your account and that will fix the problem. Obviously it didn't, because there was no problem. It's also spoofing, phone calls that people get and they say, this is so-and-so from your bank or your financial advisor, and this is going on. I mean, it's all kinds of activities out there.
Just to add, because a constituent in Stratford, maybe a year or two ago, they were scammed out here, husband and wife, out of $600,000.
Yeah.
They saw it go. I mean, you get the whole thing.
Oh, yeah.
And unlike talking to Jeff Dooley, it's still Mr. Billy. A scam is one thing. Stuff that's actually gone, there's nothing we can do about it.
Right. Yeah, it is, unless you can get to that financial institution on the other side, if you will,
Right.
quick enough, the money's gone out of the account immediately. And if the money is being, whether it's crypto kiosk or wired somewhere, most likely overseas, the ability to get that back is next to nothing. I mean, it is very, very difficult. So the timeliness of trying to stop it is, hours or a day or two, not weeks.
Thank you so
Thank
much.
you.
Really, really appreciate your
Good to see you.
time. Good to see
Thank you
you.
for all your hard work this year.
Yeah.
I know you guys have been
You have been.
challenged.
Thanks for paying attention. Folks, we are done for the morning. And before we wrap up, it seems to me, and I'm curious other people's thoughts, that essentially we do have mechanisms in statute already to meet the needs of individuals who are experiencing this tax liability part. The larger issue of what to do about fraud is sort of outside of our jurisdiction, but on the tax issues, it seems like Jeff Dooley and the Office of Taxpayer Advocate, who are really ramping up their communication with the universe that they exist, and are meeting the needs of folks who are encountering the situation as long as we can get people to them. So that where everyone else is on this topic. Okay,
Totally.
great.
Yeah.
Thank you. Thank you for your research on this one, Representative Burkhart. And flashlight is so awkward. I think with that, we are done for the morning. We are back here after the floor. So save some brain cells for next increment